Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, as we inch closer to the last half an hour of the trade, you can actually see that the markets have pulled up to the day's high point, 24,627, 141 points higher in trade for the markets. What's pulling up the sentiments for the D Street? Well, most of the sectors have actually pulled up into the green. Look at Pharma, it's driving higher, 1.8% higher in trade, healthy returns for this one. Look at metals shining bright, 1.3% higher. Autos also in the fast lane, over 1% gains for this one. Even the broader markets are finding their mojo back, about 0.6, 0.7% higher. Look at realty, banks, IT, consumer durables, that's also looking good. Barring FMCG and slight losses on PSU banks, rest of the sectors are all up. The good part is that even India VIX has cooled off, 1% lower at 12.1% at 12.1 levels. Let me quickly look at the Nifty top movers in trade right now. Apollo Hospitals after earnings, that's been a strong mover today, 7.6% higher, the top moving stock. Hindalco post earnings, 5% higher. Hero Motors, Cipla, Eternal, the other top movers. On the declining side, however, you have names like IndusInd Bank, that's down by over 1%. Adani Ports, ITC, Titan, Adani Enterprises, Axis Bank, these are the top laggards as we speak. Let's also look at the Nifty top gainers from the Nifty 500 basket as well. Let me quickly look at some of the names here. NMDC Steel is 20% circuit can actually be seen on this one, 43 odd levels for this one. Let's look at JM Financial, a very strong move, 14% higher. Premier Explosives, results reaction, now almost 20% circuit is what we see there. EIH almost 14%, 15% higher. Jain Irrigation is higher in trade. You also have Gujarat Apollo 11% up. Purvankara is higher from the real estate pack as well. Landmark Cars is higher. You also have Godrej Industries, that's up by 8.5% as well. So strong moves that actually can be seen across the board. Let's actually welcome our guest on board. We have Mr. Sharad Avasthi, Head of Research at SMIFS, now joining in. Sharad ji, warm welcome. Good afternoon to you. Good to have you with us as always. I wanted to ask you on your broad understanding of the markets right now. We've had 6 weeks of consolidation and pain continue. At this point in time, we are seeing, the markets just, swing higher and lower on an everyday basis. Earnings are making a key impact there. What's your overall sense on the markets? Where are we headed?
Yeah, good afternoon. I think it's very confusing with this additional 25% that Trump has put in. I think it's put the pigeon among the cats. And I think it's a bit of a nervous moment because now the impact is what, 0.5, 0.6, 0.7% on GDP. So that's pretty harsh actually. And unless and until I think we, get a solution to that, it will be very hard for us to get a sustained recovery. And even in spite of the fact, that 35% of the products we have a dominant positioning in the US market. But with 50% tariffs, I think for them to find a route to, bypass it or, share some bit of it would be very difficult. So I think that development is particularly very unnerving for Indian markets. And exports is one of the strong pillar based on which we were talking about a long-term growth rate, etc. Unemployment is a problem that we have been facing. So, maybe that creates a bit of nervousness. But in terms of domestic factors, I don't think we need to worry much. Largely, most of the factors should be positive for us. Inflation has been benign. And I think even the rate cut cycle, if it starts in US, it should be in sync with that in India as well. Over the next 1 or 2 months, that should start flowing in, and the next quarter number should also be pretty good. Maybe some of the textile, jewelry, and shrimp companies that might feel the burn of this tariff issue. But other than that, I don't think it will be very material. So domestic side, I'm not very nervous about it, but certainly the way this tariff tantrum is going on, I think it's shocked me also. I was not expecting such a harsh reaction from that side, considering the type of commentary we are listening to. So I think that's one negative that could impact us in the short to medium term. But long term, I think I would continue to believe, that beyond that, growth rate should again normalize. And in case some rationalization happens on the tariff front, that could further spur up a rally in Indian markets.
Okay, got that. Now, Sharadji, we are also at the fag end of the earnings season this quarter. Q1 earnings are almost to wind up. I wanted to ask you, have there been springing any red flags and green flags that you would have probably seen in Q1 earnings that would give us some idea as to how things will pan out on the earnings front for the rest of the year?
Yeah, I think one green shoot that you could take in actually is that urban consumption is finally picking up. Rural consumption was showing some signs of improvement, or rather was improving over the past quarter or two. But urban consumption was not showing any signs of improvement. I think that is falling back in place. The two-wheeler side of the demand could be pretty good. I think that would continue to do well. So within autos, even four-wheelers, I think passenger vehicles, etc., should do well with the festive season kicking in. And banks also should do well only. I think the only part could be, that the treasury part, which we were expecting to improve further. I think there has been some disappointment and rates have, moved on the other side. So I think that could be one place, one segment where it could be a bit challenging. But other than that, I think these are the sectors that would primarily do well. Two-wheelers, generally passenger vehicles also add to that. Banking and finance, I think that would continue to do well. And in terms of red flags, I think valuation wise, we are not very happy with the capital goods companies yet. I think that's a tad expensive. Some of the exchange and broking related stocks, I think that could also be a tad expensive.
Okay. Now, help us understand, Sharaji, when it comes to understanding, the key pockets to really look at in terms of valuation as well. Why I ask you this question is that what I started off with. Last 6 weeks have been a consolidative phase. In fact, this year so far, out of the 8 months, most of the time markets have either been volatile or in a consolidative phase. We have, come off the peak as well. Valuation wise, do you find any pockets where risk reward has improved, where investors can actually find the best time in hindsight, say a few years down the line when things are settled, we may be much higher than where we are. So looking at this phase as consolidative, how would you look at those pockets of value to be seen?
Yeah, I think those pockets will emerge obviously over the next 3 to 5 years, which aligns with the broader India story. So I think banking is a no-brainer that should do well. Right now, there is a lot of nervousness regarding how much money is moving into mutual funds, etc. But I still think that it's not very material, and banking as a sector would continue to do very well. The MSME side of the demand should be very strong. The learning curve on microfinance has been very strong. How they evolve and how they get out of that, I think that is something that we need to look at. So I think banking is one sector that would continue to do well. In terms of typical valuation comfort, I think, yeah, paper is something that we are comfortable. But broadly, to take industry calls would be very difficult. I think it's better if you take, a bottom-up approach and take stock-specific calls, because generally, per se, the whole industry turning out attractive is not something that's happening across the board. Like within insurance, insurance is a long-term theme. We are very bullish. But in the medium term, 1.5, 2 years, maybe most of the private insurance companies might be fairly to fully valued. Similarly, healthcare as a sector, long term, we are very bullish. Real estate as a sector, long term, we are very bullish. But within real estate, I think the pocket that looks more attractive to me is the second rung stocks or the third rung stocks. Basically, they seem like an attractive pocket. The likes of Signature Global, Keystone Reality, there's one more small stock, Shriram Properties. I think these are good ideas to look at. But I think generally, if you want to pinpoint sectors across the board amongst the frontline sectors that look attractive in terms of valuation, I think maybe IT is something you can look at. But rest of that, I think it should largely be, a pick and choose kind of approach where some disappointment gives you an opportunity to make a fresh entry point. Like we are recently looking at a PG Electroplast after this correction. I think it does look like a decent buy because the long term, air cooling part is not going anywhere. So that could be a good contra bet you could look at long term wise. And even the whole cooling space, though valuations as such are not very attractive there across the board. Maybe a Symphony looks attractive in terms of valuation, but not the typical AC makers. And I think, yeah, paper is something that we have spoken about in terms of valuation comfort. So IT and maybe the likes of say Praj is something that you could look at. I think it's seen a lot of correction. Uh, I think that looks like a decent bet if you're looking to hold on for 2.5 years. These could be ideas that could fetch you 50-60% from current levels very easily.
Okay, in case you have a 2 year or 3 year time frame looking for about 50-60% kind of returns, some of the gems have already been shared out by Sharad ji right here. We'll chunk this out also for all our viewers to note that, for those who want to cut the noise at this point in time of global uncertainty and really look forward to what could be ahead over the next 2-3 years and which are the stocks that will be suitable for the portfolio. Well, there's a diversified list that Sharad ji has just talked about. Sharad ji, you started to talk about banks, which is a no-brainer. I have to ask you, you did also mention that, right now there is a trouble. Most people want to financialize their savings and therefore they're not depositing their money in savings or the FDs as well. But look at what ICICI Bank has just done on savings account. It's kept a minimum balance requirement of 50,000 rupees. What's your thought process on that? Any strategy that ICICI Bank is working with? Because this will actually discourage a lot of first-time salaried players to really look at opening a bank account with ICICI Bank. Hardly people earn that much to save that much as a minimum account.
No, I think that's a strategy by the bank. They would have worked out the pros and cons and done that. It's not a small bank to make such a big announcement without understanding the pros and cons. But like in any game, there are faults that are done by the opponent, and there are errors that you force upon them. So only time will tell whether this is a self goal by ICICI Bank or is it something which is a good strategy for them. But I think, yeah, in a country like India to have such exorbitant numbers, I was also very surprised with the approach. But I think the breakup is that it is only for newer accounts, and as you rightly mentioned, the salaried accounts usually would not fall within the ambit. So purely new accounts, etc., and the primary focus in the urban areas where each of us has too many accounts, maybe uh, because of various reasons, but it makes very little sense. So maybe they want to discourage that. So only time will tell. Not that I think that on the face of it, it looks like a very smart move. But only time will tell how it impacts them and how it impacts, the competitors on the private side, particularly HDFC Bank. So let's see what happens. But it doesn't look like a very smart move to me on the face of it.
Fair point. So that's the one viewpoint that I really wanted to get as far as ICICI Bank is concerned. Now, Sharad, let's also talk about some of the other pockets as well. We've discussed time and again on the IT pack. What should be the strategy? This time, it's both large and mid caps that have seen a correction because the earnings across the board have not been very enthusiastic at this point in time as well. Is it time to probably look at a contra bet on IT? Or do you think the pain could only worsen from here on and therefore it's better to look at more domestic facing names like some of them which you have already taken? How would you really look at the strategy on IT specifically?
Yeah, I think maybe the domestic side facing names will have less pain going ahead compared to IT in case something further accelerates, with respect to what happens in US. Because we have a lot of focus on that part of the country, of the world, and from there the announcements have been very erratic. And till now, it's only the announcements. We haven't really seen the impact on inflation on the ground, what US faces because of these tariffs. So I think once that starts to percolate over the next 3 to 6 months, I think that will be the real test for the US economy. So the faster they remedy all this, I think it's better for them also and for global economics also. So there are two scenarios: whether these tariffs continue at these exorbitant rates and US inflation goes up substantially, it would cause a recessionary fear in the US. Then probably, the IT outlook improving over the next 1 or 2 quarters might get delayed. You might have to look at, an extended period of 9 to 12 months before any kind of bottoming out happens. But in case that does not happen and we find a middle path, these people are meeting on the 15th. So if they find a middle path, I think then the recovery could be very fast. And in case you want to put all these ifs and buts on the sideline and just focus on valuations, I certainly think you should be looking at taking contra bets in the IT space right now. Stocks like Wipro, Infosys, even an HCL Tech. I think the long-term stories for them, whether it's data centers, management consultancy, transformation into AI, and moving faster rather than running, sweatshops. I think that's body shops basically. So I think that's changing very fast for Indian IT company, and it's in sync with what the government wants, because the type of services that we have been dealing with, once we switch to the OBS kind of services, which is a much larger market than the traditional services. Generally, globally, it's roughly two times. In India, what we are doing is roughly 50%. So that has a huge scope of growing, and IT companies are evolving into that. But in case something wrong goes on in the US and we enter again recessionary fears, again we start to look at in US, then probably you might have to wait a bit longer, maybe 6 to 9 months uh, of more pain for IT. But at these valuations, I think the probability of that happening is very low. So I'm expecting a resolution of these tariff issues. It's not beneficial for them either. So maybe over the next 2 to 3 months max, you have pain on your side. But I think that should be used as a point to accumulate these IT companies.
Okay, fair point. Sharadji, one more report that caught our attention this morning is from Bank of America survey that's actually come in. It actually indicates that India has actually gone from fund managers' top Asia stock market pick to their least preferred in just the last 3 months, amid what's happened as far as the tariff is concerned. That's as far as Bank of America Corp survey. In the most recent fund manager survey, Bank of America says that 30% have actually said that they're underweight on India, followed by 20% for Thailand and 10% for Malaysia. Japan has actually fared as the best pick within the Asia markets. China has taken the number 2 spot, and a total of 99 panelists that they actually spoke to, with $183 billion of assets responded to the surveys, regional questions there. Now, this is a sharp reversal for sure from May's survey of Bank of America that actually showed India displacing even Japan as the most favored market due to the perceived haven status during Trump's initial tariff rollout had happened. Because at that point in time, it seemed like the relations between US and India are at seen as the best among the others, and therefore we were hoping that we will get favorable tariff announcements, and 3 months on we see that we are actually being seen as one of the least favored ones, with 50% tariff being announced for India. How are you looking at this survey? What does that indicate in terms of how the global funds are finding their way to India and away from India, and what should an average retail investor pick out from this, sir?
Yeah, I think the first lesson that you should pick out is that we should not try to overestimate things that are beyond our control. Largely in terms of market parlance, what has happened is that in a lot of textile stocks also we saw a lot of build up, on expectations that we will have favorable tariffs. We were trying to, decipher geopolitics and government related decisions, and we were trying to extrapolate and understand that what probably Mr. Trump would do. And I don't think that was an easy job for any one of us. And so I think, yeah, so first thing is, do not try to extrapolate things that you have very little control, or possibly something that is not possible to be estimated with any kind of, any degree of correctness. So I think that was the one big problem in terms of what has changed with respect to the FII's view. I think that's very normal. Even if I was sitting there, I would have also changed it, because the global whole dialect was very clear in favor of a very favorable India deal, that making us better in comparison to China, Taiwan, and the likes. What we have gotten is a very raw deal, and I think what is largely happening is it is largely regarding the USD protection that has taken center stage. If you look at the tariff, it's largely on BRICS, which is 50% and above, and rest of the world, it's not that steep. So I think dollar dominance is something he has started talking about very openly now. So that is one pain point that they have. So I think the whole objective of this tariff tantrum is to, continue the dominance of dollar and not lose that pole position, because that will hinder the whole debt situation, etc., very badly for them. So I think the whole thing is that they want to dominate that dollar position. That is why the BRICS, positioning is there. So I think not to read much into it. I think yeah, temporarily, yes, certainly sentiment-wise, it is a negative for India as well as most BRICS nations. But as I said earlier, I'm expecting some resolution of it. Like in 2 months, we have gone from optimism to pessimism on this survey. In case something positive happens and some midway is found out regarding for these tariffs, etc., then these surveys would also convert the other way around. And it's a short time, 2 months, we have changed the whole view. So I think it was largely based on the speculative angle rather than a very long-term potential. So I think long-term potential does not change. Short-term hiccups, yeah, they are certainly there. So might be you will have some volatility over the next 1 or 2 months till this stabilizes. But again, I think the domestic cues are going to be very positive. So we might not see much of a correction on the domestic side also in case this continues to be as bad as it is right now.
Okay, so even the downside is protected to some extent, is what you say. It's not going to just fall flat, even if the current situation persists, which is being seen as the worst case at this point in time, at least. Is there a risk of, things going worse even from where they are, sir? Do you think that, or this is being seen as the bottom of what it could be?
No, I think if you look at the rates, the way they are across BRICS, I think the probability of this going worse is very low. But we have very good neighbors right now, whether it's Pakistan, Bangladesh, we have a volatile environment, so we don't know how it pans out, whether some risks emanate from that side of the part or not. But generally, what I think is that after Sindoor, etc., there is very low probability of geopolitical tensions from these corners, and they have their own problems to handle. And 50% tariff, I think it's anyway pretty high for us to stave off. So I think it will not be something more than this lip service, yeah, and Twitter service that might continue for some time.
Do you also believe from the market standpoint particularly, if things stand where they are, whereas it is, on a very low export, to the US right now, we do see that the government has also mentioned that in case there are some sectors that are more badly affected than the others, those sectors will see that the government will handhold them and see what else can be done. At this point in time, beyond what the government will be continuing to do as part of negotiations, what is it from the market standpoint that one should remember? Should one be not too much worried about these tariff talks because the exposure is still limited? It's not wide across.
Certainly, I think it is very limited, and beyond that, also, some part is not within the tariff tantrum issue, and some parts we have a dominant position. So it is not that it will change overnight. Maybe the people will end up paying higher prices, but the transition is a painful time. Some order cancellation, some slowdown, some inventory buildup will happen in these industry. So that's a problem. And regarding government support, I think yeah, actual support on the ground and understanding and finding new markets or new ways to absorb that kind of excess production at that price point. I think that's going to be a challenge. It's not an easy task to do such kind of logistic revamping in a very short span of time. In case they can pull it off, nothing like it. So the focus will largely be on the domestic triggers. I think next quarter onwards, the quarterly numbers will be much better compared to what we've seen in this quarter. So that could also be a bit of a relief for us. So yeah, I think the government, the companies will do their bit. But if the tariff stays so high, I think there will be sectors that will face some challenges. And we know the opposition will take this as an opportunity, to further highlight the unemployment problem that might get a bit exaggerated because of this. So that is one pain point they have not been able to address. So I think the government, largely, if you look at it, they have not been able to address two major points. One is unemployment, and the other is corruption. This was an anti-incumbency government. It's been around 10 years. So I think corruption and unemployment are two big problems that this government needs to address. Regarding these particular issues, yeah, I think it'll take time. It will not be an overnight kind of thing. So let's see how it pans out. Not even on the demand side. I think even in the US cannot change it overnight in terms of the supply side issues. They will not be able to shift so fast. But let's see. I'm hoping that the impact will not be as much. But I am hoping that something resolves within the countries over the next, 1 or 2 months. So that should give a much suitable picture for this.
Is it still too early to call out to find out where the Nifty will end this calendar year with? Or do you think still one needs to watch out for a lot of triggers there to set place?
See, I feel that, the second half in terms of numbers will be very good. And, we are talking so much about this. I think 3 months down the line, even if some negotiations do not pan out, most probably we'll not talk so much about tariffs. So whenever it even happens, I remember Brexit, etc. When it happened, it was so much hype and today, you look at Brexit, there is no impact basically on the whole of Europe, etc. There was no impact basically. And if you read economist reports and everything, you would have sold everything and gone to some village or some mountain that everything is going to be destroyed. So I think 3 months down the line, I think tariffs will also be a gone case, foregone case. Not much talking about. We would come back to the fundamentals, but yeah, 1 or 2 months, I think till this is in the moment, I think everyone will talk and discuss too much about the impact and everything of it. But my year-end view is still bullish. I think we'll continue to be very bullish regarding Indian markets or global markets also over the next 6 to 7 months.
Okay, fair point. Sharadji, thank you so much. It's always such a pleasure to listen to your wonderful insights. Hope you have a fantastic time. We'll see you soon. And hoping that, after the independence celebrations, we actually see markets also coming back into the shades of brighter shades of green. Thank you so much for being with us and sharing your views. 136 points higher, viewers. On the Nifty, 24,622. We'll start wrapping up. We're just about 2 minutes away from the day's close. The good part is that we end with strong moves today after a day of sharp losses, about half odd percent higher in trade, of course led by a wide variety of sectors contributing to the gains: pharma, metals, autos, even the broader markets for that instance. Let me just quickly tell you what is happening on the small cap index and the mid cap index. That's where the broader market action is buzzing. Let's look at HBL Engineering, Garden Reach Shipbuilders 5% higher, 2640, Angel One 5% higher, Keynes Technologies 5% up. So you have defense, you have capital markets related stocks, and you also have a lot of stocks within the PSU names that are also buzzing in trade. Godfrey Phillips 5% up, BEML higher. You also have Laurus Labs, Sagility India, Devyani International, Aarti Industries, KFin Technologies, MCX. So a lot of capital markets buzz is also really taking place today. Pharma, of course, led by healthcare today. Apollo Hospitals is the top mover, 8% higher in trade. It's also the top mover in the F&O space. Bharat Dynamics, look at that post earnings, how it shot up in trade, 7% higher. Gaurang Shah mentioned that the earnings were pretty much brighter, and that's what is pulled up. Premier Explosives, look at a 20% circuit that we've seen on that one. BSE is also higher by about 5 odd percent today. So the entire capital market story is buzzing pretty strong. NSDL, CDSL, BSE, Angel One, 361 WAM, KFin Tech. These are all the names that are buzzing again in trade today. Fresh moves being seen here, but PG Electroplast another 5.5–6% lower in trade. Oil India is also down. SJVN, Life Insurance Corporation, that's another one that's also taking a beating in the F&O space today. Let me just quickly look at what else can be discussed. So I think IT, PSU banks, FMCG, these are the only sectors that are in fact declining in trade today. Rest of them have all pulled up. Let me also highlight for you the Nifty 500 names very quickly. Any newer names coming in? You have names like Yatra Online continuing with its soaring move, another 9% higher in trade. Let's actually pull up the last 1 week chart of Yatra to see that stunning move on this stock. 8.5% move on the higher side today. 55% of a rally in just 1 week. Most of it has actually come in after the, in this week so far, and we've seen 8th, 9th August onwards, you've seen that stunning rally take place. That continues to soar higher. Names like HBL Engineering, Landmark Cars, JN Irrigation, Windlass Biotech, EIH, that's also on a higher zone. Many such, Purvankara is higher. Many of these small cap or mid cap real estate names is something that even Sharadji also took the name of as well. Right, viewers, we wrap it up. 24,619, 131 points higher in trade. So things looking up right ahead of the last day trading session tomorrow. We have a truncated week. Friday will be a holiday on account of Independence Day, so the markets will not be functioning, and then we return after 3 days of a long weekend on Monday. So before that, you are seeing some buoyancy come in. Probably the independence spirit spirits getting into the D Street as well. Let's find out whether this continues even in tomorrow's trading session as well. You stay tuned with Business Today Television. Even beyond the market hours, we continue to share with you all the coverage from the world of business and finance. And of course, for the markets coverage, see you tomorrow morning.
In a major move, US President Donald Trump has